Join me as I dive into the crazy world of crypto and try to figure out why the big players are stacking up on it and what that means for altcoins. A paradigm shift is underway in the world of cryptocurrency, and it's characterized by a growing number of big players accumulating a significant amount of crypto assets. For a long time, cryptocurrency has been viewed with skepticism, and many have written it off as a fad or a bubble waiting to burst. Critics argue that it lacks intrinsic value, and its volatility makes it unpredictable and unreliable. Many investors have shunned it, sticking to traditional assets like stocks and bonds. Altcoins, in particular, have struggled to gain traction, often seen as inferior to Bitcoin, the first and most well-known cryptocurrency. As a result, they've faced an uphill battle to gain mainstream acceptance. Additionally, the lack of regulation and oversight has led to concerns about security and stability. The anonymity of transactions has raised red flags about potential illegal activities, and the environmental impact of mining has sparked heated debates. All these factors have contributed to a perception that cryptocurrency is a high-risk, high-reward investment that's not for the faint of heart. As a result, many institutional investors have stayed on the sidelines, sticking to tried and true investment strategies. But despite these challenges, institutional investors are beginning to take notice of cryptocurrency. They're no longer writing it off as a fad, but rather as a legitimate asset class that deserves serious consideration. And it's not hard to see why. With inflation concerns on the rise, investors are looking for alternative stores of value that can hedge against currency devaluation. Cryptocurrencies, with their fixed supply and decentralized nature, are an attractive option. Furthermore, institutional investors are constantly on the lookout for diversification opportunities. With traditional assets like stocks and bonds experiencing significant gains in recent years, investors are seeking new ways to spread their risk. Cryptocurrencies, with their low correlation to traditional assets, offer a compelling option. And as institutional investors start to accumulate crypto assets, it's having a profound impact on the market. The influx of institutional capital is driving up prices, increasing liquidity, and providing a level of stability that was previously lacking. It's also sparking renewed interest in altcoins, which are now being seriously considered as viable investment opportunities. As a result, we're seeing increased adoption, improved infrastructure, and a growing sense of legitimacy. So what does this mean for the future of altcoins and the crypto market as a whole? Well, it's clear that the paradigm shift is underway, and it's not going to be reversed anytime soon. As institutional investors continue to accumulate crypto assets, we can expect to see even greater mainstream adoption, increased regulation, and a growing sense of maturity. This trend is likely to have far-reaching consequences for the entire crypto ecosystem. We can expect to see new business models emerge, new use cases develop, and new industries spring to life. It's an incredibly exciting time for anyone involved in the crypto space, and it's clear that the big players are betting big on its future. In conclusion, the accumulation of crypto assets by big players is a significant development that's shaking up the market. It's clear that institutional investors see value in cryptocurrency, and that's driving up prices and increasing adoption. As we move forward, it's essential to keep a close eye on these trends and consider the implications for the future of altcoins and the crypto market as a whole. Thanks for watching, and I'd love to hear your thoughts on this topic in the comments below. If you're new here, consider subscribing for more content on cryptocurrency trends and analysis.